Welcome back everyone. The Best Aristocrat episode is a little late this month, as we are already into March, but better late than never. My article covering this series has already been up on Seeking Alpha for a few days. If you follow any of my ongoing dividend series, they are normally first shared on my Patreon, then published on Seeking Alpha, and lastly on YouTube and via podcast. I'll leave a link to the Seeking Alpha article if any of you would like to check out the tables and lists at your own pace. Alright, let's get right to it. I have two very simple strategies for finding the best dividend aristocrats each month. The first strategy is purely focused on valuation, and the second strategy aims to find aristocrats that have the potential to grow the fastest in the future. Because these strategies are overly simplistic, they will not always point out the best aristocrats. However, I have been tracking the long-term performance for each strategy since August of 2021, and each strategy is generating alpha over both NOBL and SPY. Let's start with strategy number 1, that is focused on valuation. The objective here is to identify the 10 most undervalued aristocrats at any given moment. I like to use dividend yield theory as my primary valuation technique because it's fast and easy, and most of all, it's best used on stocks with long and consistent histories of dividend growth, which makes the dividend aristocrats an ideal universe of stocks to apply this valuation method. The strategy is off to a decent start in 2023 with a return of 1.19% through February 24th. This is slightly better than NOBL that is up 0.91%, but it trails SPY that is up 3.65% this year. Since August of 2021, this strategy is 5.5% ahead of NOBL and 17.46% ahead of SPY. It performed very well in 2022 and held its own in partial 2021. The strategy follows a set of very simple rules. Each month, I invest an equal amount of money into the 10 most undervalued aristocrats. That's it. These stocks are never sold, and all dividends are reinvested back into the same stocks. It's probably not the most ideal strategy to follow, but keeping it overly simple does make it easier to track, and thus far has shown that even a simple rules-based approach to long-term investing can work. The portfolio currently holds 34 past and present dividend aristocrats. Some have performed exceptionally well, some are doing okay, and we do have a few sour apples. Some of the better performers are AbbVie, that is up 50%, Cardinal Health, that is up 63%, Chevron, that is up 71%, and Exxon, that is up 109%. And some of the less favorable investments have been 3M Company, that is down 18%, VF Corporation, that is down 42%, Leggett & Platt, that is down 12%, and Walgreens, that is also down 12%. Here are the 10 most undervalued aristocrats right now that were chosen for the month of March. Abbott Labs, 25% undervalued. Medtronic, 30% undervalued. McCormick, 27% undervalued. 3M Company, 34% undervalued. Nordson, 26% undervalued. J.M. Smucker, 69% undervalued. Stanley Black & Decker, 43% undervalued. T. Rowe Price Group, 26% undervalued. VF Corporation, 35% undervalued. And Walgreens, 24% undervalued. Just because a stock is undervalued doesn't mean it's a smart investment. And like I already mentioned, my portfolio that I track in this series is overly simplistic. I share this strategy to be used as a starting point in the stock selection process. Narrowing down a list of stocks based on valuation can help you identify potentially great investments, but you need to perform additional due diligence on all of the stocks before making any decisions. I personally like to ask myself two questions before moving forward with any stock. The first is, do I think this company will grow in the future? And the second is, does it look attractively valued today? The most undervalued strategy can help you answer the second question, but you should also ask yourself the first question and filter out the stocks that you believe will not offer growth in the future. My second strategy focuses on just that, the future growth of a stock. Here I look for the 10 aristocrats that have the potential to grow the most over the next 5 years. This strategy combines the valuation using dividend yield theory and looks at future earnings growth forecasts. These two factors, combined with the current dividend yield, are used to generate an annual expected rate of return. This strategy is doing a little bit better in 2023. It is up 5.12% through February 24th, beating both NOBL and SPY this year. It did not do as well as the most undervalued strategy in 2022, but overall it is still doing very well. Since August of 2021, this strategy is outperforming NOBL by 5.25% and SPY by 17.2%. The monthly returns are a bit more volatile, but that is somewhat expected from a growth-oriented focus. The portfolio is made up of 30 unique present and former dividend aristocrats. Here are some of the better performers: Cincinnati Financial up 26%, Nucor up 40%, and West Pharma up 28%. We also have a few bad apples, like 3M Company down 18% and VF Corporation down 45%. Overall, there are more winners than losers, and the portfolio is generating a decent long-term return. The 10 chosen aristocrats for the month of March by this strategy are ADP, Clorox, Ecolab, Nordson, Realty Income, JM Smucker, S&P Global, Stanley Black & Decker, Cisco, and West Pharma. As you can see, there is some overlap between the two top 10 lists, but there is also a handful of unique selections. While this strategy does a better job of answering my first question, it doesn't necessarily answer the valuation question. In an attempt to blend these two strategies together, I am tracking a third portfolio called the blended strategy. Here, I find the top 10 aristocrats with the fastest expected rates of return, but only from amongst the undervalued aristocrats. I initially thought this strategy would perform the best, but that has not been the case. In 2023, this strategy is up 0.35%, which is worse than NOBL and SPY. And even though this portfolio is beating NOBL by 1.34% and SPY by 13.29% since inception, it is trailing the other two strategies by a wide margin. I've only been tracking these strategies for 19 months, and perhaps the blended strategy just needs more time to work. Time will tell. The portfolio holds 36 unique aristocrats, and you can check out the full list in the linked article. The 10 chosen aristocrats for the blended portfolio for March are ADP, Clorox, Ecolab, SX Property Trust, Nordson, Realty Income, JM Smucker, S&P Global, Stanley Black & Decker, and Cisco. That's it for today. Thank you for watching and see you next time.